Lumkile Mondi is a senior lecturer at the University of the Witwatersrand, and Economist Lumkile is the TransUnion CEO. They've been doing consumer surveys on this, and our very own Xolani Mbandra, our business editor, joins us. Xolani, good afternoon to you. Okay, we did expect this, but in a way, the fact that this was a unanimous decision is sending a signal all on its own.
Yes, they are saying to us, we see you, we see the hardships that businesses and consumers are going through, and it was not to be expected that right now we would hike interest rates or actually cut interest rates. Not at all. Although that has been expected in the fourth quarter or in the later quarters of this year, third quarter and the fourth quarter, that's what we should expect. 25 basis points could be pushed to 2022 if the current economic conditions remain the way they are. And it doesn't help also, Stephen, that as a Reserve Bank governor was talking there, you have the breaking news of load shedding, and we know what that does to the economy. But most importantly, he spoke about the unrest. He spoke about what it will do to the economy. For example, the growth forecasts are being revised downwards and not changing, upwards as it normally does for 2022 and 2023. It just shows that these are the last things our economy need right now. This, lockdown level 4 is the major thing that we should be dealing with. But load shedding and these riots are just going to, be a drag on our economy that we least can afford for the next year.
Lumkile Mondi, good afternoon to you, and thank you for your time this afternoon. I mean, we have figures from the Reserve Bank showing how the economy at one point grew more quickly than we expected it to. We have all of these problems within the economy, and of course, Eskom, that announcement today. Is keeping rates unchanged the right decision?
Absolutely. I think at this juncture, until we understand the impact of the recent mayhem, and also how much impact is had on investor confidence, and how quickly do insurance pay back some of the damaged and claims that were coming through across the economy. We need to be skeptical about the potential to recover at the rate that we saw in the first quarter. So looking forward, as the governor said, looking forward to all revising down. We're all very worried about food prices specifically. If you look at oil and fats, has risen double digits. If you look at price of fish, it's also increasing. And therefore, we're worried also about the climate, given what we're seeing in the north, in Germany, the floods, in China, the floods, and then the US, there's a huge pressure on fire, impacting on plants, etc. So these are not encouraging at all. So there's so much unknown, making the Reserve Bank to keep the rates where they are.
I mean, Lumkile, again, it's also quite difficult to make a decision in this environment. 5 years ago, really a short time ago, Reserve Bank governors had long sort of horizons. They could make predictions about where the world would be a year from now. In the last 18 months, all of that's gone out of the window. No one predicted the violence that we saw last week. No one predicted the pandemic. It's a tough time to be a Reserve Bank governor or a member of the Monetary Policy Committee right now.
Absolutely, because the Reserve Bank responds to the policymakers. When the policymakers are in the dark, just like economics usually are, and are talking different languages, not only do they confuse us as economists, as broader South Africans, but also for the work of the bank, because we are not so sure whether the National Treasury is going to bow down and allow the introduction of the basic income grant, and what that will mean to the demand of goods and services, and therefore prices rising. So working with a partner, with a policymaker, such as the Ramaphosa government, indecisive, ineffective, inefficient, makes it very, very difficult for the governor, but also for us as well, including business, who at the moment are also shocked that no action came from our security forces, and therefore the losses that we're seeing and the loss of jobs that are accompanying it remain a big area of concern for business and investors, whether we go back and invest, given that you've got a partner that is incompetent, that's unreliable, that's ineffective, that's inefficient? These are the questions that many economic players are having as far as the policymaker is concerned.
We're going to come back to this issue of reform in a moment, Lumkile. I mean, strong criticism you make there, ineffective, inefficient, ineffective. That's our government you're describing. And yet, I can absolutely understand why business would see that. You could argue that the other breaking news on our screen right now about Eskom and stage 2 load shedding is a direct result of all of that over the last decade, maybe decade and a half. Lee Naik at TransUnion, you've been speaking to consumers, you've been talking to people about their levels of indebtedness, how much money they owe the bank, how many store cards. Does anyone still have a store card nowadays after the last year? What are they telling you about the problems they're facing, about how they're feeling about their finances?
I think it is quite scary right now. When you think about the number of active credit users relative to the adult population, we have 27.2 million active credit users in South Africa. What's scary, of that 27.2 million, almost 77% of our national disposable income goes towards servicing debts, whether it's loans, machinistas, vehicles. So we are highly indebted, and this was actually prior to COVID-19. Throughout the course of the pandemic, we saw a massive decrease in jobs or even working hours. And what we found in the recent surveys we do quite often is that almost 9 out of 10 consumers are telling us that their households are struggling and they're worried about their ability to pay bills. So today's decision to keep interest rates flat goes in with some way to helping, Stephen. But there's something underlying in the data that's worth calling out. When the bank had kept the interest rate low throughout the period, not everybody took the advantage of actually paying down their debt and what we call deleveraging. Many people actually took on more cheaper loans, and they find themselves in a more indebted position. And then the final data point to call out, just to make my point, prior to COVID, we monitored about 39% a delinquency rate. That means consumers that take on credit and they don't pay their bills in 3 months in a row. During the pandemic, that's gone up to 44%. So on one hand, keeping interest rates low are good. We should ask the question, being it is National Savings Month, we aren't necessarily taking the benefit of making good household choices to shut down luxury purchases in some cases, cut back on discretionary, and focus on deleveraging, fewer loans, better consolidation to have a better financial health, Stephen.
And Lee Naik, I mean, those numbers are frightening. I mean, 44% of you know, is one of the figures, 77 another. I mean, these are really frightening figures about where people are. They just can't pay back money that they've already spent. You can't get that money back.
That's right. You can't get that money back. And I think the point that Lumkile would say exactly the same is you've got to draw a line in the sand and start to make choices at a household level. We actually saw, and this is quite scary, Stephen, from a financial services perspective, one of the key decisions that consumers made during the pandemic at the height of level 5, where they started cutting their investments, their retirement funds, and even day-to-day insurance for their vehicles. So we need to understand the household is constrained, to your point, but we can make choices. You know, the want-haves versus the may-haves. Some people are still choosing to go to high-end products and brands versus shopping across. A black T-shirt is a T-shirt, right? Let's look for the T-shirt. So looking and making better choices is where it starts. And even though we talk about savings, it will start with making better and more informed choices. Running the largest credit bureau in Africa, I've got to point out the stat. 27.2 million active credit users across all 5 large bureaus. On an annual basis, we only give out around 500,000 free credit reports relative to a total base in excess of 27 million people that use credit. So it's scary, the data in the analysis, but we need to help consumers not be scared about it, but to start to take charge by educating them on knowledge is power. And there is a solution, but you've got to start somewhere, Stephen.
Lee Naik, I mean, it's frightening. Kalani and Bandra, I mean, you can walk down the streets and you will see what is being described in raw economic numbers. We saw the violence last week. We see it today when police and the SANDF raid in Sebokeng. How people are living partially because of COVID-19. There are no jobs, there's no income.
People are hungry, and that's why it was so easy in some of these places to stoke the fires of this unrest. But it was so also, you know, important to note that 50% of South Africa's output comes from these two provinces, KwaZulu-Natal and Gauteng. And when you destabilize those two provinces, you're making sure that you're destabilizing the economy. So when they call it economic sabotage, they may be right, but not really, insurrection as they've said it. But going back to what, the governor said, the gains that we've made in the first quarter that surprised on the upside are now being negated by this particular unrest. Investor confidence, we don't know where we are when it comes to that. The president still says to the CEOs, I'll take you with me over to meet the world leaders and everybody else to see if they're still interested in coming here to invest. And that policy, that uncertainty is really, really deep and worrying, because how are you going to put money in a country which cannot even guarantee the safety of your bricks and mortar, your investment? So there's really, really something that the president needs to do with his cabinet right now to demonstrate that he is serious about economic reconstruction and recovery as part of his plan.
Well, 200 shopping malls looted last week. What was it, 160 liquor outlets? Just the most incredible numbers. 3,000 stores, I think it was, off the top of my head, I think is the figure in my head. We're going to have the Monetary Policy Committee of the Reserve Bank deciding unanimously to keep interest rates on hold, historic lows, 3.5%. Our business editor, Kalani Mbanjwa, with us, Lee Naik from TransUnion. They've been doing research among consumers. Lumkile Mondi, you'll know him, the economist at Wits University, with us. Lumkile, the case for reform. We've been talking about reform for easily the last 15 years, nearly 2 decades. The Reserve Bank governor normally talks about reform and makes the case for reform. He didn't today, but I think that's possibly just because he's got so much else to talk about. You suggested government was inefficient, ineffective, and indecisive earlier, and the lack of reform really points to that.
In fact, that's the area where really the partnership between the presidency and the National Treasury is slowly yielding some results. For example, Stephen, in the energy sector, the acceptance at last by government that they need to allow emergency generation from 5 megawatts to about 100 megawatts was a huge concession, given that the Minister of Mineral Resources and Energy was pushing back around this issue. So that announcement on its own was investment positive for many firms to invest on their emergency generation and see what they can do. However, even with that announcement requires a long-term perspective from business to invest on embedded generation. And therefore, the uncertainty of the recent few days, but also the obvious incapacity and incompetence in government, means that even though we've allowed that embedded generation to come into stream, the uncertainty about whether this government can stay the course has remained quite a huge challenge for many of the players. And the second area, of course, where we've seen the reforms, even though they've been announced, is around the spectrum. As you know, Stephen, in my sector, because of the lockdown, we teach remotely. And some of my students are in the rural and peri-urban areas where the access to data, but more importantly, speed of data, is much lower than my student in the urban areas, particularly in the metropolitan areas. So it's difficult for us to conduct business. Can you imagine other players of education, how much challenge they have? So there is progress around reforms, but one would like to see taking place at a faster rate. However, as I've said, that the fact that our president and his cabinet are not seen to be having a common vision, then that means that the message that we're reading as lecturers, as teachers, as business, as investors, makes us to make our own call. Our call is that wait and see whether this government can stay true and deliver on it. And that's the biggest risk we're facing, is the ability of staying the course, whether they won't change the course, given that they're divided at policy level.
Lee Naik at TransUnion, the consumers that you talk to all really can't pay back debt for 2 reasons. They're spending too much money, or let me put it in a different way. They're spending more money than they're able to earn. And that just keeps it straight and mathematical. Now, it's one thing to say, sure, don't spend money. And I mean, South Africans are famous. I think there's a famous phrase that we spend money we don't have buying things we don't need to impress people we don't like. That said, the surest way to get out of debt is not through a basic income grant or any kind of government support. It's through actually being able to get a job. The jobs don't exist, and government reform actually has a direct result on the numbers that you're quoting about the debt that people are trying to pay back.
That's right. You know, I was thinking about Lumkile's comments. Something it's worth mentioning, a couple of things that aren't there. There's a point we call out the income Gini, which Lumkile will tell you is the highest in the world at 0.63. It's a measure, Stephen, of the wealthy versus the poor. So when you think of the unrest and insurrection over the last days, it's a data point that's come to my mind, Lumkile, many times over. The second data point is unemployment, currently sitting at 32.6. But in that 15 to 24 bracket, this is where it gets really interesting, 63%. Now, when you think of this high unemployment, it's a concern for me. Now, before I talk about the consumer, it's worth calling out the following. The largest employer of the unemployed right now have been these small SMMEs, the small and micro businesses. We found that during the course of the pandemic, almost a third of registered and unregistered small businesses shut down completely due to a lack of demand and a lack of cash flow. So the very businesses that need help to come back online have now potentially been torn down during the recent unrest as well. It's worth pointing that out because the consumers can do a lot, but equally so government support, TERS funding, other donor funding must be focused on helping SMMEs because they're the greatest creators of jobs for the unemployed. And I really want to call that because it's a key point in how we can recover and improve our employment in South Africa. The second point on the consumer side, it is absolutely difficult. I must give this advice, though, is that knowledge is power. And we try as digital organizations, because as Lumkile said, digital is now not an option. Digital is the first way that banks and retailers and small businesses will survive in a post-pandemic world. So when you think about knowledge is power, my biggest encouragement to consumers is you need to know how bad things are or good things are by getting your credit report. It's free of charge once a year. Your bank's offering it up, a credit bureau is offering it. And Stephen, as you look at that data, you can then say, okay, I've got all these debts, pay off the smallest debt, right? And to your earlier point, do you really want it or do you need it? Who are you trying to impress? Making calls to protect your household and your ability to have tenure as a household is more important than impressing the Joneses.
I mean, all of this is, important stuff that's going on in the economy. I mean, Xolani and Bandra, one of the things that strikes me is that if you look at the politics of the moment, the president presenting himself as a wartime president, the symbol of the democracy that is under attack, what this does is, and because of other developments, Ace Magashule being suspended as Secretary General, it could mean that the time for reform is now. The risk is now it is possible to blame the president for a lack of reform if there's no big measure. In other words, this is quite an important political moment related to our economy.
We are not going to get there. Looking at it right now, we just postponed the local government elections. We are going to be hearing slogans. And before we know it, it's going to be another ANC conference by the end of the year. Let's talk about reform. One piece of, good news, actually, it did happen. The president didn't announce that independent power producers can now, generate 100 megawatts of electricity. That was brilliant. That was good. It actually made a lot of companies who had actually applied sit up and take note to say we are listening to our concerns about the security of supply of power. But if you look at all the other, the reform document came out in 5 years ago. So when you're saying that it should be happening now, this is the time for it to happen, no, it should have happened 5 years ago because we lack implementation and the ANC-led government knows this. It did not happen. So there are a number of things that a government keeps on saying and economists keep on talking about. There are a number of things that government can do right now. You don't have to do the whole, slew of recommendations in terms of those reforms. The spectrum auction. It was supposed to be, done last year. We were under lockdown. It could have been done then. Why not? We haven't got the answers for that. The reforms in a number of areas, education, health, there are many, many areas of reform that we're not going to see before that conference. And I know now I'm getting into the, the politics of it. But the political economy is what, is driving everything in South Africa right now. And I'm telling you, the way I say it, we're not going to get much, if in terms of reform, until before this December 2022, when the ANC has to go to conference. So talking about reform, maybe that's the reason why the governor didn't even talk about reform for the first time in a very, very long time when it comes to government.
Xolani Mbandra is our business editor. He's not an optimist. I don't know if we have any optimists on our panel. Lumkile Mondi, do you agree we're not going to see reform in the near future?
Spot on. I think what is encouraging, Stephen, is really the local government elections, which probably will take place in the first quarter of next year, because I'm quite optimistic there that we're going to see some re-emergence of locally based organizations that will be looking at local solutions. So I think the future of SA post the mayhem that we saw last week is really the strengthening of local communities and reclaiming our space as local communities and voting away from the ANC and towards people that we know, that we can call to account because they live in our space, and therefore encourage them to stand for public office. That's the game changer in the metropolitan areas. Well, of course, in the broader South Africa, it may not be the case, but I think in South Africa's metro areas, wait for massive reforms that will accompany the first quarter local government election, as the ANC is defeated in many of these metros, and new players come in to occupy that space, and new coalition emerge in that process.
Lee Naik, I mean, of course, if there's no reform, the situation that we have, the numbers that you've explained to us, will only get worse and worse. I don't know how much worse they can get, frankly.
So I'll say two things. Probably not aligned to Lumkile at this point, but I would say that I'm a cautiously optimistic person. Where we come from has been worse, so it can only get better. I have to believe that. I would tell you, though, that the reforms and over the last few months, there's some really interesting things happening on the game field right now, Lumkile. Lumkile would say, can it happen faster? I agree with Lumkile, right? But I think there's a couple of things worth noting. In the last couple of days, I've seen the emergence of the public-private partnership like we have not seen it before, right? If this is a testament of what could happen if government and private sector work better together and find each other on common strategies, I have hope. Indeed, I do have hope. In the meantime, what do consumers do? It does mean that for as long as interest rates lay flat, and it won't be for much longer, Lumkile, we need to help as government, as private sector, banks, every single sector, help with the education. We've got to find ways to help people make better choices. The kind of expression you made earlier, Stephen, it isn't that commonly known. It's a fancy expression, right? But for me, I keep saying knowledge is power. As bad as it is, figure out how bad it is, then ask for help. Put your hand up and say, my name is Lee, I need help. And that's the best advice I can give, given what I see around me. I need to be the custodian of hope, like everybody else around us, because we need to believe South Africa can get better. And, and I always believe back, Stephen, it's only been 27 years. Everybody wants things to be solved in 27 years. I believe we can get them solved. Now, if the pressure comes together in the ecosystem, Lumkile, and we all apply pressure, we can do a lot much quicker. Is the playbook wrong? I'm not sure whether it's wrong, because there's a lot happening now. But we see more results now as South Africans. As taxpayers, we want more done quicker.
Well, I mean, I think as someone who, I think all of us want more done quickly, more quickly. Xolani, there's obviously a lot that's going to happen in the economic space, I think, over the next little while. The risk, of course, is that things just continue to get worse. We saw what happened last week when that is the case. What it really boils down to is we need some sort of action. We need some kind of decisiveness. And we need things to happen.
Yes, unfortunately we'll still be the bearer of bad news because the next time we speak, probably we're going to talk about, you know, the unemployment numbers. We know the unemployment numbers are going to worsen when the Status A reports the next time because of what happened when it comes to this particular unrest. 150,000 jobs are at risk. So we know that, you know, we need to support those small businesses. Like Lee said, they are really the big employers, the SMMEs. They need the support right now, and if we can do that, even as a private sector and the government, and just work towards that, at least we can save the jobs that you know, are still there, but still at risk of not being there by the end of the month. So it's going to be a very difficult you know, next 6 months for South Africa, and it is boiling down on a number of things: the vaccination rollout and the uptake thereof, and of course how we actually deal with the current problem of load shedding, which has returned.
Xolani and Bandra, thanks very much indeed. I really do appreciate the time. Our business editor, Lumkile Mondi, senior lecturer in economics at Wits University. You know him well, known economist Lee Nayak at TransUnion. Thank you very much indeed.